Today we will solve one question from the chapter Incomplete Records, and this is our question, one part of the question, and the second part of the question is this one. So this is the complete question. In this question we are to prepare a trading account and profit and loss account of Anjali for the year ended 31st March 2013. So this is our question. We are to prepare trading account, profit and loss account for the year. By mistake here I wrote 2012, but here the year will end on 31st March 2013. So for this year we need to prepare trading account, profit and loss account, and then we need to prepare balance sheet. And this is the information. Anjali is a sole trader. She maintains a bank account but not a full set of double entry records. It means she maintains her records by applying single entry system. So therefore her records are incomplete, and with the help of incomplete records now we have to prepare final accounts. And see what information is given in the question. This is the beginning date of the accounting year, 1st April 2012, and this is the last date of the accounting year. On first day, these are the information of the assets and liabilities, and these are the values of these assets and liabilities on the first day, and these are the values of the assets and liabilities on the last day. And after this we have information regarding the banking transaction, summary of receipts and payments. These are the receipts and these are the payments. And then after we have some additional information. And now we are to prepare final accounts. So before we prepare final accounts, first we will compute the opening capital of the business, and for that we will prepare opening statement of affairs. So statement of affairs as on 1st April 2012, the beginning date. So in this first we will take fixed assets. So see the question. On the first day we have fixed assets, premises, and the value on the first day is $60,000. So this we will write here, premises. Premises, and the value on the first day is $60,000. And then the next asset is equipment. We have equipment and the value on the first day is $18,000. So we will take this equipment and add fixed assets, equipments, and the value is $18,000. After equipment we have current assets. It means overall we have only two fixed assets. So the total of fixed assets is $78,000. This is the value of fixed assets. Now after considering fixed asset, now we will consider current assets. So we have current asset is stock, and on the first day the value is 28,100. So we will consider this is stock, this item, and the amount of stock is 28,100. After stock, the next item is debtors, and the amount is 23,800 on the first day. So this debtors are also assets, debtors, and the amount is $23,800. After debtors, the next item is creditors. So creditors are our current liability, and the amount is 19,700. So creditors we will take under head current liabilities. Under head current liabilities we will write creditors, and the amount of creditors are $19,700 on the first day. So this we will write $19,700. Then after creditors, the next item is accrued general expenses. Accrued general expenses means outstanding general expenses, $200. So this item also we will show under head current liabilities. Accrued general expenses. Accrued general expenses $200. Accrued general expenses $200. After this we have prepaid general expenses, but on the first day there is no value. So it means on the first day we do not have prepaid expenses. Then we have bank balance 12,700. So this item we will show under head current assets, and the amount is $12,700. So $12,700. So now the total of current assets are 64,600, and from this total now we will subtract the current liabilities. So we will get the working capital. So let's see. What will be the working capital? So the total of current liabilities is $19,900. Now from this total from the total of current assets, that is 64,600, we will subtract the total of current liability. So we will get working cap. So our total of current asset is $64,600 and total of current liability is $19,900, and the working capital will be current assets minus current liability, 44,700. So this is our working capital. And now we will make a total of fixed assets and working capital. So see, the total of fixed assets and working capital will be 78,000 is our fixed assets, and the working capital is 44,700. So the total will be 1,22,700. Then from this total, now we have to subtract the long-term liabilities, and long-term liabilities are nil. So the balance will come one same amount, 1,22,700. This is the first total of the first part of the balance sheet. And now we know the total of the second part will also be the same. And now in the second part we show only capital. So in this manner we computed that the capital is the beginning capital is 1,22,700. This is our opening capital. So in this manner we computed that on the first day we have opening capital 1,22,700. So again I am repeating, to compute working capital, opening capital, first we have taken fixed assets, that is $78,000, and then we have taken current assets, and the total of current assets is 64,800, and from this total we subtracted the total of current liabilities, that is 19,900, and we got the working capital 44,700. And from this, after this we added this working capital to the fixed assets, and we got the total is 1,22,700. This is the capital employed. So on the first day the capital employed in the business is 1,22,700. Now after computing this opening capital, we need to compute the one more thing, we need to compute the bank balance. On the first day we know the bank balance. On the first day we have the bank balance, and the amount of bank balance is 12,700. On the first day the bank balance is 12,700, but we don't know the closing bank balance. So now we will compute this closing bank balance, and for this we will take help of this receipts and payments account. These are receipts and these are all payments. So in this first we will take the opening bank balance. Opening bank balance is 12,700. Now we will compare both the sides. Opening bank balance is this, and these are receipts and these are payments. So now we will compare both the sides and we will get to know the amount, the closing balance of the bank account. So if we see both the sides, then we find the total of credit side is more than the total of debit side. So first we will make total of the credit side. So 2,49,400 plus 19,620 plus 38,400, then after plus 40,000 plus 3,800 plus 1,900 plus 8,000. So the total of the credit side is 3,61,120, and same total we will write on the debit side, 3,61,120. And from this total now we will subtract 12,700 minus 3,31,600 and minus 12,000. So the closing balance will come 4,820. It means bank account is showing credit balance. So it means on the last day we do not have bank balance. Instead of bank balance we have bank overdraft. Balance credit. This is the bank account in the cash book, bank column in the cash book, and it is showing credit balance. It means on the last day we have balance 4,820 and it is credit balance. It means it is bank overdraft. Now we will prepare income statement, trading account, profit and loss account for the year ended 31st March 2013. So see, so in the income statement first we require net sale. So as I explained earlier that net sale consists of cash sale and credit sale. So for cash sale we will refer the cash book. So in the cash book, if we see on the receipt side there is cash sale $12,000. So this we will consider here. We know that our cash sale is $12,000. And now we require credit sale. So to know the credit sale we will prepare total debtors account. Credit sale is not given in the question, so to compute the credit sale we will prepare total debtors account. So to prepare total debtors account, first we require opening debtors. So debtors, see in the question given, debtors opening value is 23,800. So this I will write, and debtors are assets. Assets always show debit balance. So this I will write on the debit side. Balance brought down, and the amount is $23,800. So $23,800. And closing balance we have to show on the credit side. Balance carried down. Closing balance also given in the question. So closing balance is $26,800. So this I will write here, $26,800. So opening balance on the debit side and closing balance on the credit side. Now let's see how much amount we got during the year from the debtors. So for that we have to see the receipt side. If you see the receipt side, we got see money from debtors. Receipts from debtors $3,31,600. And for this we will pass entry. We are getting money from debtors. So see the entry for this transaction. Bank account will be debited and debtors account will be credited. So it will be $3,31,600 as we are getting money. And as debtors account is credited, so this entry will be posted on the credit side of the debtors account. On the credit side we will write bank. So on the credit side we will write bank. We got the money and the amount is $3,31,600. So this we will write here, $3,31,600. And now in the question there is no discount allowed, no bad debts. So finally now we will compare both the sides. So both the sides of the debtors account. So first we will make total of the credit side. Same total we will write here, $3,58,400. And from this total now I will subtract the total of the debit side. So let's see what difference will come. So the difference is 3,34,600. This is actually credit sale. Credit sales. The amount of difference is the amount of credit sale. So in this manner we computed credit sale, $3,34,600. Now this we will take in the income statement. What was the amount of credit sale? $3,34,600. $3,34,600. Now see what is the amount of total sale. 12,000 is the amount of cash sale, and credit sale we computed with the help of total debtors account, and that is 3,34,600. So in this manner the total sale is 3,46,600. This is the amount of total sale. After computing sale, now we need to consider cost of sale, and for that we require opening stock. So opening stock we know very well. See, in the question it is given opening stock. Stock on the beginning date is $28,100. So this we will write here. Opening stock $28,100. $28,100. Now we need to add purchase. So but purchase we don't know, but we know the amount of closing stock. So the closing stock is $29,800. This is the amount of closing stock, $29,800. But we need purchase also. So to know the amount of purchase, we will prepare total creditors account. This is our total creditors account. So in this total creditors account, first I will take opening creditors. See, these are creditors. Opening value is 19,700. So first I will write this opening balance. Creditors always show credit balance brought down, and the amount is $19,700. So this we will write here as opening balance $19,700, and closing balance will come on the debit side. Balance carried down, and the amount of closing debtors is 20,200. So this we will write here $20,200. Now during the year, let's see how much amount we paid to the creditors. For that we will see the payment side of the cash book. If we see the payment side of the cash book, we will find one item that the amount paid to the creditors is $2,49,400. During the year we paid this much amount to the debtors. Now let's see what entry we will pass for this. As we are paying to the creditors, so creditors account will be debited and bank account will be credited with this amount. And as creditors account debited, so this entry will be posted on the debit side of creditors account. So on the debit side I will write bank. And the amount paid to the creditors is $2,49,400. $2,49,400. Now after that we will compare both the sides of the creditors account. So first I will make total of the debit side. Same total I will write here, 2,69,600, and now from this total I will subtract the amount of total of credit side. So the difference will come $2,49,900, and this is the amount of credit purchase. So in this manner we computed the amount of credit purchase, $2,49,900. This is the amount of credit purchase. So this amount we will consider here in the income statement. In the income statement we will consider the amount of purchase, and the amount of purchase is just now we computed $2,49,900, but there is one adjustment. So let's see the adjustment first. If we see the other information, we will find, see, during the year ended 31st March 2013, Anjali took goods costing $4,000 for her own use. So for this, what entry we are to pass? So for this we will pass one entry, drawings account debited, and purchase account will be credited with the amount of goods withdrawn. So as purchase account is credited, so the value of purchase will be reduced. As per the total creditors account, we know the amount of purchase is $2,49,900, but now we have to subtract $4,000 from this figure, as goods costing 4,000 we have Anjali has withdrawn for her private purpose. Now the remaining amount of purchase we are to consider, and the remaining amount is $2,45,900. So now this we will take in the income statement, $2,45,900, $2,45,900. So this is the amount of purchase. So now if we solve this, so let's see what will be the amount of cost of sale. 28,100 plus 2,45,900 and minus 29,800, that is closing stock. So we will get a cost of sale $2,44,200. This is the amount of cost of sale. So now we will subtract this, and we will get the amount of gross profit. Sale minus cost of sale. So the gross profit is $1,02,400. This is the amount of gross profit. After this we will take other incomes, but if you see the question, there are no other incomes, so I will write other incomes in nil. Now the total income will be same amount only. Same amount will come, 1,02,400. This is our total income, and now from this total income we have to subtract the expenses. So let's see. To find out the item of expenses, we will see the payment side of the cash book. So if you see the payment side of the cash book, we will find journal expenses, and the amount of journal expenses given, the amount of journal expenses paid is 19,620. So 19,620, and let's see if there is any adjustment regarding journal expenses. So if we see this information, so regarding journal expenses, on the first day there is outstanding journal expenses. So this is opening outstanding, we will subtract this, because this we paid during the year, and as this amount belongs to the previous year, so that's why we have to subtract. So 19,420, and then after we have prepaid journal expenses also on the last day. So this amount belongs to the next year, we paid in advance, so and this amount included in this figure, so that's why now we have to subtract. So 08091, 19,080. So this is the amount of journal expenses which belongs to the current year. So with this amount I will show journal expense in the income statement. Journal expense. After adjustment, the net amount is 19,080. After journal expense, the next item is drawings. So drawings we will subtract from the opening capital in the balance sheet. Then we need to write wages. Wages 40,000 is there, and regarding wages there is no adjustment, so we will consider the entire wages. Entire amount $40,000. After wages, the next item is property tax 3,800. No adjustment, so we will take property tax, and the amount is $3,800. After property tax, the next item is insurance 1,900, and there is no adjustment regarding it. Insurance, the amount is $1,900. After insurance, the next item is equipment. So equipment is our asset, so this item we will not take in the income statement, but depreciation on equipment we will consider. So let's see, let's compute the amount of depreciation on the equipment, and regarding this see what is written in the question. On 31st March 2013, equipment should be depreciated by 10%. 10% on what? On the cost of equipment owed at that day. So on the last day, whatever equipment we have, on the cost of that equipment we will compute depreciation at the rate of 10%. So if we see, on the first day we have equipment and the cost of that equipment is $22,500, and during the year also we purchase equipment costing $8,000. So total equipment on the last day, the cost of total equipment is $30,500. So on this now we will compute depreciation at the rate of 10%, that will come $3,050. So this depreciation I will consider in the income statement. Depreciation on equipment, and the amount is $3,050. After this item, after depreciation, one more we are to, on that day it was decided to create a provision for doubtful debts of 2.5% of the debtors. So now we need to create provision for doubtful debts. So let's see, on the last day what is the amount of debtors. On the last day the amount of debtors is 26,800. So 26,800, and it's a 2.5%. With this percentage we have to create provision. So 26,800 and its 2.5% will come $670. So with this amount we will create provision for doubtful debts. So I will write this amount here. Provision for doubtful debts, and the amount is $670. So I think now all the expenses have considered. Now we will make the total of all the expenses, and the total of expenses is $68,500. And now from total income, now I will subtract this total of expenses. So let's see what will be the net profit. Total income 1,02,400. From this we will subtract total of expense 68,500. So our net profit will come 33,900. This is our net profit. And now, so in this manner we prepared the income statement. First we have taken net sale, then we subtracted cost of sale, we got the gross profit, and as the other incomes are nil, so total incomes will also be equal to the gross profit. Then from the total income we subtracted the total of all the expenses, and finally we got the net profit $33,900. So in this manner we completed our income statement, and now we have to prepare the closing statement of affairs. So statement of affairs as on 31st March 2013. So let's see the question. Again premises we will take, and the closing value is given 60,000. So I will write premises under head fixed assets, premises, and the amount is $60,000. After premises, the next item is equipment. So regarding equipment, let's see what is the written down, because written down value we have to show in the balance sheet. So what is the written down value of equipment on the first day? 18,000 as given in the question. Then we purchase a new equipment 8,000. So the total is 26,000, and from this we will subtract the depreciation, that is 3,050. So 26,000 minus 3,050. So the written down value of equipment will come 22,950. So with this amount I will show the equipment in the balance sheet statement of affairs. Equipments dollar, let's see the amount again, 22,950. $22,950. So these are the items of fixed assets. So let's make the total of fixed assets. So our total of fixed asset on the last day is $82,950. Then we need to consider current assets. So let's see the question. The first item of current asset is stock, 29,800, the closing value of the stock, and the amount is 29,800. After stock, the next item is debtors, 26,800. So I will show debtors. Debtors 26,800, and from this we will subtract the provision, and that is $670. So the net amount we will show is $26,130. After debtors, see the next item is creditors, 20,200. So creditors will come under head current liability. Creditors $20,200. The next item, accrued general expenses on the last day is 0. So leave this item. Prepaid general expenses on the last day is 340. So this item will come under head current assets. Prepaid general expense, and the amount is $340. After this we have bank balance, but on the last day there is negative bank balance, $4,820. This is bank overdraft, so this will come under head current liabilities. Bank overdraft $4,820. So now let's see what is the total of current assets. Our total of current asset will be $556,270, and let's see what is the total of current liabilities. The total of current liability is $25,020, and now from this total of current assets I will subtract our total of current liability. Then let's see what will be the working capital. So working capital will be $31,250, and this working capital I will write here also, 21,250. Then after this we will make the total of fixed assets and working capital. So our fixed asset is 82,950 plus working capital. So capital employed will come $1,14,200. Then we subtract long-term liability. So in the question the long-term liability is nil. So the total of first segment will come $1,14,200. Now we have to complete the second part. For that we need opening capital, and we have computed earlier that opening capital was 1,22,700. So that I will consider here 1,22,700. And now to this opening capital we have to add a net profit. So net profit we have computed 33,900. So 33,900. Now let's see the total. The total is 1,56,600, and from this we have to subtract drawing, and we know the amount of drawing. Let's see, as per cash book the amount of drawing is $38,400. So this we will write here, $38,400. But one more item of drawing is there, and that is that Anjali has withdrawn goods costing 4,000. So that is also drawing, goods withdrawn. So that item also we will take 4,000. So now the final total of drawing is 38,400 plus 4,000. The final total is 42,400. So this now we have to subtract in order to get a closing capital. So let's see. So So the closing capital will come $1,14,200. So in this manner the total of the second part will also be $1,14,200. So in this manner we prepare the closing statement of affairs. Total of first part is also 1,14,200 and total of the second part is also 1,14,200. So this is our closing statement of affairs. Fixed assets, then we computed working capital, and the total of fixed assets and working capital is 1,42,200, and this is the total of first part, and total of second part is also 1,14,200. I hope that you understood this question and the procedure how to solve the question.